Have you ever watched a stock that's been dead in the water for years, just completely forgotten, and then all of a sudden it just roars back to life? Well, that's exactly what we're going to break down today. We're going deep into the anatomy of a massive stock breakout to really understand the incredible forces that can wake up a sleeping giant.
So check this out. On one hand, you've got what we're calling the lost decade for this company, IFCI. I mean, we're talking over 10 years of just nothing. Downtrends, stagnation. But then, look at the other side. Out of nowhere, this sudden, high-velocity explosion in price. It's a complete Jekyll and Hyde situation told through a single stock chart.
And that brings us to the million-dollar question, right? What is going on here? Why now, after all this time? Is this just some flash in the pan, a bunch of short-term hype? Or is this the real beginning of something much, much bigger?
All right, so the first, most obvious reason for all this excitement is an upcoming IPO. But here's the twist. It's not actually IFCI's IPO. It belongs to a completely different company.
This is what we call a classic proxy play. It's actually a pretty clever idea. If you can't invest directly in a private company that you're really excited about, you find a public company that owns a piece of it. It's your backdoor pass to get in on the action before anyone else.
And here's exactly how that chain of value works for IFCI. So, IFCI holds a big stake in another company called SHICL. Now, SHCL, in turn, owns about 4.4% of the massive national stock exchange, which is getting ready for its own huge IPO. So you see, by owning IFCI, you're kind of getting that backstage pass to the NSE's big debut.
Okay, and this is where it gets really wild. Let's talk numbers. At the time of this surge, the entire company, IFCI, was valued at around 17,000 crore, right? But get this, the value of just its stake in the NSE was estimated to be a whopping 23,000 crore. Wait, what? Yeah, you heard that right. The market was basically saying the whole company was worth less than just one single asset it owned. That is a massive, massive disconnect.
But, as exciting as that IPO story is, it's not the whole picture. Not even close. To really truly understand what's happening here, we have to look past the headlines and dive deep into the stock's chart.
See, this move isn't just a simple reaction to some recent news. There's a much deeper story here, a story of pressure and release that's been building for more than a decade. And it's all right there, visible in the patterns of its price.
The key pattern we're seeing is something technical analysts call a rounding bottom. The best way to think about it is like a giant slingshot being pulled back really, really slowly over a very long time. It represents that slow, gradual shift in power from the sellers who were in control for years to the buyers who are quietly taking over. Now, this whole pattern plays out kind of like a 3-act story. Act 1, the long, painful decline, where you have tons of frustrated investors just trapped. Act 2, the base. This is the long, boring part where most people just give up and forget about the stock. But this is also where the smart, long-term investors are slowly and quietly buying up shares. And then you get Act 3, the markup. That's the explosive move we're seeing now, where demand just suddenly and completely overwhelms supply.
And for every big move, there's always a key number, a line in the sand. For this stock, it was 61 rupees and 80 paise. You gotta understand, for years, this price was like a brick wall. The stock would hit it and just fall back down, again and again. So when it finally smashed through that level and on big volume, well, that was the starting gun. That was the signal that the old story was over, and a brand new, powerful trend was just getting started.
Now, look, a breakout on a chart is one thing. That's great. But for it to really last, for it to be sustainable, it has to be backed by something real happening in the actual business. And in this case, it absolutely is.
And as the source analysis points out, when a company's fundamentals, its actual earnings, start to turn around, the stock chart tends to form this healthy, sustainable uptrend. It looks more like climbing a set of stairs, step by step, rather than just a speculative spike that's going to crash and burn.
And here is the proof in the pudding. Just look at this dramatic shift in performance. The company went from a pretty significant loss of nearly 230 crore to a profit in the third quarter. This fundamental turnaround, it gives a solid foundation to the whole story, suggesting this price surge is way more than just some IPO hype.
So let's recap. We have a huge technical breakout on the charts, and it's being confirmed by a real fundamental turnaround in the business. The big question now is, okay, so where does it go from here? Well, the analysis lays out 3 potential paths forward.
Okay,
First, here's the roadmap. Analysts are watching these key price levels very closely. Just think of the support levels as floors where buyers are likely to step in and buy, and think of the resistance levels as ceilings where sellers might show up. The stock's journey from here is going to be a battle between these different zones.
Now, based on those levels, the analysis gives us three possible scenarios. The most likely, with a 55% chance, is what's called a blue sky breakout, basically a continued swift rally. The second most likely, at 35%, is some healthy consolidation, a pause to catch its breath and build a stronger base before the next leg up. And then there's a small 10% chance of a bull trap, a nasty reversal that could happen if something bad derails the story, like, say, the NSC IPO gets rejected.
So if we step back from this one particular stock for a second, what's the big lesson here? What can this whole case study teach us as investors and observers of the market?
The really crucial takeaway here is this idea of convergence. The most powerful, most explosive moves in the market happen when two totally different stories align perfectly. You've got the long-term story told by the chart and the real-world story told by the company's business fundamentals. When both of those stories point in the exact same direction, the results can be absolutely incredible.
And that leaves us with one final thought to chew on. We've just seen how a simple chart can tell an epic story of a decade of despair, followed by a sudden and dramatic turnaround. It really makes you wonder, what other powerful stories are hiding out there, in plain sight on the charts that you look at every single day?